Hi, this is Randy Finney with the right side of the chart, and this is a mid-session update for Tuesday, March 18th, 2025. It's 11:40 a.m. Eastern Time. So I'm starting the video. Just going to cover some levels to watch, share my thoughts, things that I'm seeing in the market today, and we'll keep this one relatively brief. I think you guys prefer these probably shorter videos, and I can break it up into different videos or obviously screenshots. Remember, I'll go into the comment sections. I've made a couple of posts. I'm going to get to one of those charts that I updated in earlier today here in this video. So let me just dive right in, pick up where we left off on Friday. Last video was Friday's video was covering here the SQQQ. I talked about the recent surge in volume, a lot of money coming into SQQQ, which is the 3-time inverse, i.e. bearish or short Nasdaq 100 ETF. So you have 300% leverage, just mimics the Nasdaq in reverse 3 times. On Friday, I said highlighted this key level. I'm going to draw in now, and then I'm just going to hit the play button and show you what I talked about. And there's a point to this because where we're at now. So I was highlighting this support, saying it would likely go on Friday or Monday, and if it did, the likely target would be a backfill here, which would correlate to about a 4% drop in SQQQ, which would be about a 1.25% or so jump in the Nasdaq 100, and followed by reaction. Of course, that's a gap backfill, and that's exactly what happened. And let me just hit play. You can see down here the annotations from that video, and then I'm going to pick up, and there's a point to this, kind of show you where we're at now and where we might go from here.
Also, it's because there was a gap, and you can see it's a nice support shelf. So if we can break this level today or Monday, depends what happens today. We're still right at resistance on the market. I'll get to those levels in a second. And support on SQQQ. That would be a likely backfill. That's about a 3% drop in SQQQ, or 4% drop, which would correlate to about a 1.25% rise in the QQQ. Let's flip the chart.
Okay, so let me stop it there. Okay, so that's I don't know if you can. It's what I just said. The 4% drop in SQQ, 1.25% drop in QQQ, and that's exactly what happened. It happened on Monday. That's when we broke. Here's that 15-minute chart right there. Oh, that was then. This is now. And I just added one line to this chart today. That was the level I was highlighting on Friday. They broke it. They back tested it, rejected, and a perfect. I mean, close enough for government work. I had that line on Friday at 35.28. We hit a low of 35.32. We're talking 4 pennies on a $35+ security, fraction of 1%. And then, as expected, bounce. So now, more so, this is, well, what was that? So we reversed. Remember, yesterday's high, we had a reversal off the highs and then a little fade at the end. That was those buyers. Remember, there are a lot of folks. I call them, JCL, Johnny Come Lately shorts, retail traders, but I know there are professional traders as well. Many of them that use this, even institutional traders, will use ETFs in lieu of futures or the single non-leveraged version. So a lot of money in it. All I have to do is look at the volume patterns. Volume have surged on SQQQ. So my takeaway is, yes, that was the expected reaction there. Carried a little higher than I thought it might, but either way, it's all it is right now, and this is what I want to point out. It's a back test of the same trend line. That broke, which was the catalyst for this drop, as well as the support level break there, the gap. We bounced, and where do we bounce to? With perfect back test right now. As I do this video, we are back testing that trend line. As I like to say, it's resistance. Once support is broken, it becomes resistance. And there's also this line I just added today, 35.38, is this big old gap right here. You can see another unusually large gap in SQQQ. Pretty good size gap, I should say. And we're currently testing the bottom of that gap, which is about 38.35 on SQQQ. So those that bought SQQ here would likely, a lot of them, active traders, that is, likely taking profits right here. And so I just wanted to point that out. And there are things I do not like about today's pullback in the market, namely the same thing I saw yesterday. I'm going to get to that in just a second, and that is continued deterioration, some underperformance in a lot of the big market leaders. I'm seeing what looks like institutional distribution. However, However, let's flip this upside down. Remember, this is SQQQ, so if it drops, it means the market bounces. QQQ is pretty much that in reverse without the leverage. This is my 15-minute chart. Please forgive all these lines up here. They're older lines. I'm going to just highlight the salient levels here. This was my primary downtrend line right here. And I had this, what I call BOD, or benefit of the doubt. It comes off the February, late February, around the 22nd or so, 21st, high right there. Yeah, the high of, I think, February 21st. And then I have had this line here, what I call my BOD, or benefit of the doubt. It still comes off that same February 21st reaction high. I had excluded on the first one this little punch through because I had more reactions on the lower trend line. But again, BOD is where the benefit of the doubt. And then we hit it here, and we had enough reactions. These are 15-minute candles. We had reactions, then broke out. So again, in reverse right now, and if you're looking at, the pure index, this is what this is, QQQ, we have simply a breakout and a back test. So the case for the rally is still intact. Again, there are things I do not like about both yesterday and today's action. I'm going to get to those in a second. But as of now, we have roughly equal lows there, right? And so far, the day is still young, a higher low. And we have here, we have higher highs in price. This is what we call, that's the definition of an uptrend. So it's a very short term, or what I call a near term uptrend, with an intermediate term larger downtrend. And of course, if you go out to the daily charts, the longer term trend is still bullish if you look at it there. So you could find trends, on based on the time frame. Bullish trend, longer term, intermediate term bearish, very near term bullish. Could that be a bull flag? Oh, absolutely could be a bull flag. Again, let me get to some other levels to watch. So what you don't want to see, ideally punch through the lows. Now look, I'm going to maintain what I said the other day, what I started saying last week. It's about risk reward. This market could go down big if we get another leg down. Remember, we've had a lot of big, powerful sell signals on the weekly charts, and I'm seeing additional leaders breaking down recently. I'm going to get to those charts in a second. So all I'm going to say is, look, if this is, let's just say this does prove to be a bull flag, bear flag continuation pattern. If you're not familiar with what that is, please look that up. It consists of three parts: an impulsive leg down, known as the flagpole, the flagging action, which resembles a flag like this. If it's more of a triangle shape, that's called a bearish pennant. Same exact thing, just a different shape of the consolidation. The initial leg down, you want to look for on increasing volume, which you have, and then declining volume on the consolidation. So right now it meets two of the three criteria, and the fourth is, or criteria. The fourth criteria is, fourth criteria is an impulsive breakdown below the flag. And, depends how you draw it. Maybe that was it right there, and this is the breakdown right now. But one thing that's, you do with those, you take the flagpole. I'm trying to draw it here. And then you add that to the highest point of the flag before it breaks down. It gives you a measured target. Now, that's going to take us down to about 420. Remember, I've had these targets that I've not waffled on, maintained for a long time. The longer-term targets, which are still very much in play, that would take us a little north of my third target there. Again, that's just the measured target of the flag. So that's what to look for. But as of now, we're still making, so far, this near-term uptrend is still intact. And we're, more importantly, we're backtesting dual support on QQQ, both the downtrend line, and there's that comparable gap. I just showed it to you on SQQQ in reverse. Speaking of SQQQ, like I said, I do volume is very much a component of technical analysis, volume analysis, volume studies. And if you look, I'm going to turn the volume up. You can see, as I mentioned, we have unprecedented volume in SQQQ right now. You can see the volume really ramping up, even more so than we had back in the last bear market in 2022. Over time, this thing reverse splits, volume picks up, but you can see the big surge right here, these gray bars. What that tells me is a lot of money is quickly moving into this. So you're getting a lot of short interest, a lot of bearishness in the market. And you can also see where at SQQ is at the, it's 200-day moving averages. So it's at resistance there. Let me de-highlight those lines. I like my volume lines kind of subtle, just so it doesn't make my chart busy. I just turn them up so you guys can see them. So that's it. You can see it on the daily. Big hill. A lot of interest in SQQQ. And, net or no guarantees, but the more shorts piling in fast order, you build up that short interest, and it helps too. Doesn't completely eliminate additional downside or a floor, but it helps to do that, because when you have a highly shorted security, be it the indexes or a stock, it tends to put a floor in for a couple reasons. Number one, if let's just say there's a universe of folks that will short and then some that don't short. They don't even know what it is. They think it's anti-American or whatever reason. But when you've got a high short interest, most of the shorts, the bears, the flexible traders like me are already in. That's number one. And then who else is going to short? But then more so is those shorts need to cover. I always have said for years, there's only one guaranteed buyer in the market, and that is the short seller. You can be a foaming at the mouth bull on the stock market and telling everyone how strong, how high you think it's going, how much you plan to buy. But you don't have to buy. You could be bullish in rhetoric, or maybe you're foaming at the mouth bullish, but you're all in. You've got your last dollar put into SQQQ or QQQ and Nvidia and Apple and Amazon and all those things. And you may be super bullish, but there's no more dry powder. And so, or you have dry powder, but you may change your mind. You may not buy on the dip. Something might change your mind, right? Right now, a lot of people are starting to second guess, should I buy this dip or not now? Short sellers must cover. If you short a stock, you're borrowing shares from someone that you don't own, and you must at some point in time buy to cover to close that position out. And effectively, when you buy SQQQ, you're not closing out, they are, but they're using derivatives to synthetically create a short on the Qs, and that it just changes the put call ratio and everything else. So I want to point that out, and there is no limit here. Just because you've had a surge doesn't mean we can't go higher. Let me get to the market leader. So that's the analysis on QQQ. Let's get to let's talk about the indexes. So there's that potential bear flag. If you happen to be new to the site, remember, I have nothing but check marks, things that I've been expecting, anticipating, and waiting for, and they've all happened. The break of the trading range, a clear break of the trading range, a clear break of the 200-day moving average, a clear break of the trend line off the January 2023 lows. And I'm going to rifle through some of the market leaders right now and show you, what could be a sign that the yesterday's popped after the second day of the breakout. Remember, we broke out Friday, rallied into mid-session Monday yesterday, and then a reversal so far. I had a maximum price target of about, I think it's 7%. Still could be hit, but let's take a look at the overall leaders here. This is Apple. Apple hanging in there by the skin of its teeth. If it can reverse soon, almost positive divergence. You're almost starting to take out that divergence with lower lows in the indicators. For all intents and purposes, are about equal with lower lows in price. But you also have, you turn off all the lines, and this is why you just cannot get married to anything in this kind of market. Any longs or shorts, too heavy. That is a textbook looking bear flag consolidation pattern, complete with the requisite declining volume on the formation of the flag or pennant right there, and it would measure way down there. So just something, food for thought. On the flip side, Apple is holding up relatively well last few days. We can speak fundamentally, but we've known that for years. Largest stock buyback program in the history, I think, of any company. I know on Apple, and so they've got a ton of cash to fire off. And but again, it's recently was or still is a $3 trillion plus company. So as much money as Apple has to buy their stock, there is a shite ton, a whole lot of Apple stock spread around the world in pension funds, individual investors, institutional investors, and if just a relatively good percentage of those folks decide it's time to maybe even just lighten up on Apple, and everyone's selling at once, that's a lot of that can overwhelm any stock buyback programs. Just keep that in mind. Now, all we can do is go off the charts. We know they're going to keep buying their stock back, but maybe they're not firing off those programs now. Maybe the folks in charge of that program see it going a lot lower. I see it going a lot lower. This is major sell signals on the long-term charts. My longer-term targets have a lot more downside in both Apple and the market, but I'm just more concerned about where do we go this week right now. All right. So Apple kind of holding up today, but I'm just seeing, and again, yesterday too, a lot of names. NVIDIA right back. Look at that. Boom. Right back to the 200-day exponential moving average, and so far rejected there. And remember, before this was a little brief punch through. This was a solid, you don't have to squint to see if NVIDIA took out the 200s. We hit it here the morning of. You don't see it all the way, but in that pre-market session when we covered in reverse on August 5th, we were right at the 200-day moving average. This time around, they're clearly taken out. That denotes we have entered a bear market, most likely, with a lot more downside to come. And the MO is often on these, especially on tech stocks. Once you're clearly below the 200s, you short rallies back too. You game those bounces and then reverse back short. So I just want to say from that perspective, so far it's a rally back to and a rejection off the 200 exponential moving average. If it can power back up, maybe it wants to get rejected off the 200 simple, which is still above. In the bottom of the deep seep gap. This was our last swing short entry, which is there's been no deviation. I speak to long-term investors as well as active traders. Long-term investors, we have what I believe a golden short entry there. We shorted that deep seep gap. I gave you my long-term targets, which I'm still maintaining as at this point in time. That's my current target. So far you are profitable to the tune of about, until the recent lows, about 25, 26%. But if that's hit, you're going to be, make about 72% on this short trade. And so you might want to just sit tight and ride out the counter trend bounces that I speak to for active traders. Anyway, I just wanted to give you that kind of technical overview of where these big market leaders are. Microsoft, again, weekly chart, I haven't moved these lines. I've moved them over. The final target has always been down here, targeting this level here. That trend line will probably come in with that 197.24 level, and that's been my bear market target for Microsoft for over a year now. It just went sideways for a while, and but is clearly trading below its 200-day moving averages. Nothing bullish about this stock. If it can pop that downtrend line, maybe a counter trend bounce. Otherwise, we're clearly, I may turn off all the lines. And what I'm doing right now for you guys, again, I'm just picking apart what I call the Mag 8, the market leaders, showing you their technical posture. Many have given up the ghost, break of the 200. We danced on the 200s for months, and it wouldn't go too far below them, wouldn't take them out, as I've said many times over, because the rest of the other Mag 7, if you want to call it the Mag 8 like I like to, the other Tesla was already taking it down. Just like the previous bear market in 2020, I highlighted that before. There were two different stocks before that were the first two to break. The rest of the lot were rallying and happy and above their 200s. Once the majority correct their 200s right around the beginning of 2022, boom, the bottom fell out. We had a bear market. And so that's what happened here. And you can see we finally clearly gave up the 200s, got far enough away from them, both in time and price. This is 2-3 weeks of trading. Perfect back test, kissed the 200s, and that was all she wrote. From there, Microsoft on that final back test, once the 200s were clearly given up, it's been a 10% drop so far, and no signs of a reversal. You've got maybe a bearish PPO crossover. You're not even all the way down to the oversold reading on the RSI. So, in other words, just an ugly stock. We can bounce, sure, and get a counter trend bounce, but this is not where I'd be looking for a stock that's going to go to new time highs anytime soon. At least not the way this chart looks now. Something changes, I'll let you know. Amazon, potential low-level bullish PPO crossover to watch for. It hasn't happened yet. This is what I call low-level bullish PPO crossovers. You had 1, 2, 3 in the last couple years, and this one we reversed, covered all our shorts there. That was August 5th lows, and so we'll watch for that and pop of the trend line. and a recovery. Amazon is south of its 200s right now. It's also oversold. So this one I would like better on a bounce than Microsoft. But you need to take out the trend line, get back above the 200s. All I can tell you definitively right now, we're at pretty decent support. I've had these lines here for a while. If you look at my weekly chart, you can see it even better. Nice. Was resistance, false breakout, became resistance again, resistance, resistance for weeks. These are weekly candles. Big green breakout candle, and we're back testing that level, but we're also below the key 200-day moving averages. We lost them last week, clearly printed a close below, and we're clearly even further below them right now on Amazon. And again, this was our sell signal back here, a beautiful wedged uptrend line break. And Amazon, again, one of the world's most powerful and profitable companies, already down, just not from the highs, just from that sell signal we got about 5-6 weeks ago, already down 16%. So, and again, based on the charts, I see a whole lot more downside. Again, I'm only speaking to, let's, if we can get one little bounce here and recycle back in at more favorable objective levels on the short trades, great. But sometimes when things break, look, if you want to kind of eyeball how much a stock like this, one of the most beloved stocks, one of the most profitable, and nobody can argue that Amazon is not a earnings juggernaut. It just dominates retail. Everybody uses it, and it's not going away. But just to kind of put it, what I'm trying to do, especially for you newbies out there, putting in hard terms, and this wasn't even, by the way, the 2022 bear market wasn't a vicious, you want to talk vicious, go back to 2000, think dot-com bubble, 2008. There's been some pretty mean bear markets in the past that have made the one that we had in 2022 look like a cakewalk. But what I'm doing there with the crosshairs, I'm just showing you from high to low. If you look at my pop-up box, so that's 1.4 months, 6 bars. A bar is a candle on a weekly chart. So 6 weeks, we dropped 40%. Okay. So far, just to put it in perspective, we've dropped 22%. So just about half. Again, I am still leaning towards that bounce scenario, but I'm doing this for you that if you, in case you are gung-ho that we're going to bounce, and Randy's leaning towards the bounce, and Kramer said we're going to bounce, or somebody, don't fall in love with it. Just use your stops, and the takeaway is don't underestimate how far the market can drop. There are excesses in the market at the recent highs that are much higher as far as valuation, sentiment, all the frothy signs I've seen that say we could easily drop more than that over the same period of time. Again, not my current preferred scenario, but when you take this all this analysis collectively, that's why I do these long-winded videos. I don't just look at QQQ or just SPY or just IWM. I look at the leaders, what makes QQQ tick, and it's these big guys. All right, so there's Amazon, at support below the 200s, which puts it in a precarious or bearish technical posture, but also at really good support. And why is that support? You have 2 major reaction all-time highs back there, double top high that set up that bear market. We tested it again, tried to break out, failed. You see what happens on a failed breakout, but then finally broke out. And so if you want to be a glass half full guy or gal right now, what you see is a multi-year topping pattern, major resistance, and a breakout to new all-time highs, and simply nothing more than a back test right now. So yeah, you can make that case. This is super bullish and one of the best times to buy Amazon in years, and it may prove to be. To me, I see the divergence. I see a lot in this market that says new highs and beyond anytime soon in Amazon is unlikely. But I only speak in probabilities, not impossible. Unlikely, not impossible. I'm just, like I said, reflexive bounce here, be great. Reshort at higher levels, get aggressively short again. And if that doesn't happen, I just have to then decide when to, if we drop down, what to do next. To go long again, short again. Let me get through these, and I'll give you, some of the other levels to watch, some other things too. Google, Alphabet. Beautiful uptrend line, big giant divergent high, just nothing but just a beautiful, if you're a bear, like, beautiful red candle. Why does they keep saying the word beautiful over? I hate to sound like Trump, sound like an idiot. 166.58 support taken out too, but that candle in one fell swoop, that big fat red bearish candle, and it was so obvious of a short, took out the primary trend line. This is a trend line that goes all the way back to the beginning of 2023, like most of my tech stocks. Took out the 200s in one fell swoop. Closed clearly below them where you didn't have to squint to see if it was a weekly breakdown, a weekly close below. If you missed it, you got an opportunity, a gift. And we bounced off support and you back tested and you were presented a gift on Alphabet if you were just trading this stock to short the kickback rally to the 200s. And through this week's lows, you made 10% in just a couple weeks. Now, here's where we're at. We're clearly below the 200s. We're way below the trend line. This is nothing but a bearish chart. It looks like a start of a much bigger drop. And again, I speak micro and get a little granular. In the near term, I can still see the decent chance of, unless the market craps out here soon, of that another pop. But as I go over this, I'm not liking, and I didn't like it yesterday either. The market was up. There was good, one day doesn't make a trend. Overall breadth in the Nasdaq 100 was pretty good. There were a lot of green stocks. I saw more green on my screen, but the leaders were all at one point all red. Even in the day when we were still up early in the day. But there's Alphabet. Look, guys, a trend line that could pop and give us a little rally. When I drop down to the 60s, there's still a lot of stocks. I didn't cover them all that have these 60-minute divergent lows, aka positive divergence. So that's it, guys. The potential's there for a bounce. But sometimes in a bear market, and quite often you'll set up divergences on the way down that just either don't play out at all, meaning they get burned through, you just keep going lower and you no longer have divergence, or just as they start to look good, like the real deal, because 60-minute divergences in a bull market are often the catalyst after corrections to new highs and beyond, right? That's been the catalyst for the last couple of years, these 60-minute divergent lows and corrections. But in a bear market, just as a rally starts to look good and everyone thinks it's safe to come back in the water, that's usually when they turn around and dump it and you get the next leg down. So in other words, they don't usually make it to their measured target. Measured target meaning if we had a pattern, a well-defined, let's say like a bullish falling wedge pattern, for example, the measured target on a bullish falling wedge pattern, there's different ones you can read about. The one I use is so simple and highly effective. You just take the widest part of the wedge, add it to where the wedge breaks out, and that gives you a measured target. All right, let me cover the rest of these and we'll move on here. So we have price support on Alphabet there, as I think I covered already. No, there it is on the daily chart. Again, not super duper, but you can see it was support here. There's a big old gap right there, so it's decent support, but we're also taking out much more significant support right here when we took out the 200s. The trend line, that was just again a beautiful breakdown there. Look at that, boom, back test for 1, 2, 3, 4 days, which was 1 week back test, right back to the 200s and rejected. Textbook bear market sell signal-ish action. So let's cover a few more. Meta was one of the last holdouts of the Mag 7, but just gave us a nice clean sell signal right there on that breakdown below the minor uptrend line, following the divergent high straight down to my secondary, larger, more significant uptrend line. Took that out, and Meta for the first time in a long time. Actually, might have hit it in the morning of there, but you got to go back a while before you can see Meta at the 200-day moving averages. So I don't know whatever crazy folks were buying it up here, but if you liked it there, you got to love it down here on the 200s after a 23% drop. But this one had a lot of hot air in it, and sometimes you just go right through the 200s, especially if the majority of other market-leading stocks have already broke. But again, collectively, I'm showing you that some of these guys are still holding the 200. Broadcom, I consider one of the Mag 8. It's still a big company, almost $1 trillion in market cap, a little less. And this is my primary, the purple uptrend line. If I can grab it without moving everything, there's my primary uptrend line. And it's a very, very well defined. Again, another beautiful uptrend line. Lots of reactions there. So well defined, a blind man can see this trend line. And so we're dancing on it. And as I like to say, support is support until unless broken. So right now we're at support. We break that support. You're also going to take out the 200s. You may not be able to see them in this video until I turn the line off. These red and blue lines are the 200 exponential and simple. They come in together. So that's triple intersecting support. Very important support level. PPO's turning up, trying to make a low level bullish crossover there. The last bullish crossover below the zero line was right there. That was right on the line. Let's circle this one right there. I highlighted that back on August 5th. And that subsequent pullback there to the 200s. And that was also bullish crossover. So that's it. You're above the 200s. Potential bullish PPO crossover if we can just turn up a little bit here. We're coming off oversold conditions. We were almost oversold there, almost but not quite there. So this one will help move the needle in the Nasdaq 100. That's why I'm covering it. I drill down to the 60-minute chart. I can see a downtrend line, which would likely be the catalyst to spark a rally if it can run. I'm going to give you one other level to watch if you want to trade this one directly or just watch it for the market. Nice level there. It was a major reaction low, and we've been dancing on that level about 196.70. If it can pop that, you have positive divergence. That would be the catalyst for a nice rally there in Broadcom. So one of the better looking individual stocks if you're trying to pick some of these Mag 8s to game. Tesla, it's not going up, but it's not going down either for the last few weeks. Crazy company, crazy times. You've got a former Democrat who, Musk used to be a Democrat and then swung kind of all the way right. Trump's minion right now, and he sells cars to Democrats. It's kind of crazy. So they're, generally speaking, I don't mean to offend any Republicans or any nonpartisan people that own a Tesla, but it tends to be a green car. And so it's just crazy times that this is going on, and he could care less. And some of his rockets are blowing up in his SpaceX company. But at the end of the day, same folks that loved it up here and wanted to buy it at 485, the dang stock has fallen 55%. Is Tesla going to go away anytime soon? I doubt it. Doge will be over sooner than later. First I heard, I haven't heard any updates. I think it was supposed to go through July 4th. I don't know if that's still the date. And then, Musk will, he'll never completely go into the shadows. He's pretty, he likes the camera and attention. But my point is, guys, look, it's Tesla and it's down, it's beat down. The charts just aren't as nice as some of the others. But here's a trend line. We popped it the other day on the 60. And then I had a little minor trend line here that gave way. But when I look at this, I'm going to move this divergence line to right here right now. Any marginal or equal new low, we're almost to that previous low, will still be a divergent low. So, and again, you say what you want about Musk, about people burning Teslas or, not buying them right now. You have just probably a massive amount of short interest in this stock. I wish I could tell you that so I do check them at time to time, but short interest, it baffles me. I've been doing this for decades, and I've been following short interest for decades. And the one thing, technology has advanced. We got AI now doing all kinds of crazy stuff, but they still have this antiquated reporting method. They only report short interest to the exchanges bi-monthly. That's twice a month. You have a dissemination date that comes out of, memory serves me correct, 11 days after the reporting date. So you talk about dated in a fast-moving market. You're getting information that is up to, from, almost, 2 weeks old. So I can just tell by looking at the chart, what a stock's done when the short interest is ramping up. So, Tesla, my point is Tesla can go up, but they can spark a rally in the market. You probably get a nice short squeeze going in Tesla. There's some with better looking charts, like I went over before with you. Apple's kind of flagging, Nvidia, Microsoft Microsoft looks 60-minute divergent low and a downtrend line there to pop. Amazon, nice 60-minute divergent low, clean downtrend line. So you want to replicate these downtrend lines, set price alerts, and if they all start popping, remember QQQ and the indexes already popped their downtrend lines. So if you, this is what I was saying yesterday, I noticed, and today the leaders are sucking wind. But if these leaders start to, run, we're going to get we could get a very healthy bounce in the market. But this is what we need to do. We need to take out these trend lines. So I already probably have an alert. And if I'm sitting here one day, or if I run errands, sometimes that's the beauty of being a full-time trader. Things are slow, and I want to go, midday and go get a haircut or grab a lunch. It's slow. That's what I do. But then if I'm sitting there and on my phone, I start getting beep 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 alerts going off. I'm going to find a computer or get back home. And so if you get in short order, a lot of these guys breaking out, you got to move quick. You could see a pretty quick short covering rally that takes us up to those bounce targets I gave you in short order. And if you blink, you might miss it. Or we just break the recent lows, divergences get taken out. Something else comes out on the economic number. Remember, the economic data is starting now finally confirm what I and others have been saying. We're going to be in a recession this year. Very few were saying it 2 months ago in the beginning of the year. Now all the Johnny-come-lately analysts and economists are getting on board with, the economy's slowing down. Well, there were many other things showing that before. And anywho, so we'll see. But how much of that's been priced into a drop of 22% in Amazon? So this is how it works. You'll start to get more and more recognize or realize, the economy is probably going to slow, and then we go back to talks from no recession to either was it going to be mild or moderate recession. And then they're going to say, well, okay, let's even acknowledge a recession. Let's say it's moderate. Well, Amazon's already down 22% off the highs. Let out a lot of hot air. Now, everyone that wanted to own Amazon before for years, but it wouldn't let them in, have an opportunity to buy it. So that's how this game works. And then right as everyone thinks, okay, market's rallying, maybe the recession fears are overblown, safe to get back in the water, that's usually about the time the next shoe drops. Alphabet, again, I'm just showing you the 60-minute charts. I already covered that. Meta. See, they all have these little 60-minute divergences, a lot of clean trend lines. So I'm going to stop it here. But again, to keep it very simple, we broke out the trend line, broke above the downtrend lines on the indexes, but a lot of the market-leading stocks haven't. We're not going to get a big that 7% rally if we don't break out on at least on half of these, if not better, these market-leading stocks. The setup is still there, so I still think there's a decent chance. Again, I do not like the fact these market leaders have been not just not participating, but getting sold pretty hard. Meta down another 4.25% today, and they're all red right now at the moment, obviously because the market's red. VIX isn't doing much today, so the market's down, but that's seems there's not a lot of worry, at least by the VIX. It is up, but not a lot. This is just VIXY, that swing trade I gave you. Told you we'd expect a pullback here. Got it so far to that kind of minimum and preferred target back to S2, which was support level there, and that's it. So I still maintain these longer term targets. They're rough targets. We'll look at the VIX futures on spot VIX. It's just a matter of, here we are on the little uptrend line right there. If the market can't rally here, bottom line is, if these market leaders, I just showed you their downtrend lines on most of them on the 60-minute charts. If we can't pop those and pop them soon and keep those divergences intact, then you'll probably start to see the VIX moving back up. Again, it's been non-responsive today. So if you want to get back in, if you did take profits on the VIX and or shorted it, this isn't a bad time to start scaling in. Maybe even consider also an indirect hedge to a long. If you're trying to game a bounce long on QQQ or any of the high beta or the small caps, you could consider a long position in the VIX. You'd have to position size it accordingly. And $1 in QQQ doesn't equal $1 in the VIX. The VIX moves a lot more in percentage terms. But that way, if the market breaks down, you're going to lose money on your longs, but VIX should start to perk up here. Other than that, You know, these are all support levels. I don't think the VIX is going to fall much more, even if the market rallies. I think the VIX will stay elevated for some period of time. The market's going to have to clearly take back the 200-day moving averages and other things, I think, for the VIX to make new lows. VIX will probably stay in this trading range, and then once the next leg down happens, the VIX is going to pop this trading range and let loose and head up to my next targets I gave you on the daily chart. Okay, let me wrap it up here. If I missed anything, I'll follow up in the comment sections below like I usually do. I believe I covered, maybe I didn't. Subscriber asked me today, earlier, for an updated chart on NQ. I posted my 60-minute. Nothing's changed. These are all the exact same levels I gave you before, with the potential bounce targets, include my maximum bounce target up there about T2. But what I did add, I told them I added today 2 levels, a resistance level there, and that would be at yesterday's high because that's a reaction high, and I see a couple reactions in there. R1 was, the resistance. We popped it, but that was a failed breakout. So that in itself was bearish. The fact that, remember, yesterday we popped the top of the recent trading range, its spacing pattern here. So when we fell back in, that's why we had a pretty heavy down right there, because this breakout was a false breakout. However, as I said, we're still above the recent lows. And then, or again, earlier today, you can check it. It would be the post before this one or the one before that I provided this chart before we even got there, of course, the 381.55, and it correlated with that. I've started the video showing you resistance on SQQQ, which we were at, the downtrend line and gap resistance, as well as support on QQQ. And so basically this chart, that was an object, and still we're not far above it. When I screenshotted the chart I posted, we're right there. So that was an objective level, because this was the support level I added, and you can see why right there. And so far it held. I put it 381.55, and the low was, let me go to another monitor. Trying here hard. Yeah, whatever. Right about, whatever, you can see it. It's pretty much what we hit, about to the button. And again, we haven't bounced much. That's why I'm saying it's still objective. And if you're looking for a stop level, you can have a stop a little bit below there. I spoke recently about the potential to backtest the trend lines. Problem with backtesting is trend lines come in at lower and lower levels each day. I have both the BOD and the regular trend line. You need to decide if you want to do that. Now, if we do come in, if we have a little more weakness today and tomorrow, it's not going to change. We're still going to have, this is a 60-minute chart I'm on, we're still going to have positive divergence. I want to point that out. So a break of the recent lows is not a complete death blow to the markets. As long as it just goes in, clears out, they'll probably want to run those stops if that happens. If you see that in itself is not going to be bullish. It's going to be bearish to break the recent lows. But a reversal back above would be bullish, because that means this whole thing right here, if we drop down below, this would be a false breakdown. And what it's going to do, if we can reverse, again, the buy point is on the reversal. Once you see that, oh, okay, we ran the lows, but then we shot back above them, and that was a false breakdown, aka bear trap, sucks in short sellers, blows out the stops on longs. And we would, again, still have the positive divergence if we punch down anytime soon and make a new low, and it could still keep the potential for this rally going. Much more than that, if we drop a lot more than that, you're going to make new lows, you're not going to have divergence, and you're not going to have a strong case to be made on the 60-minute chart for a bounce. So remember those downtrend lines in the market-leading stocks and all these other levels I covered here. That is it. I'm going to wrap it up. I went a little longer than I thought, but pretty comprehensive view of the markets, mainly focused on, of course, on the Nasdaq 100 in this one. This has been Randy Finney with Right Side of the Chart. Have a great day.